Domo just dropped its Q1 Fiscal Year 2027 earnings, and buried inside the numbers and corporate language are 10 things that could completely change how you think about this company. Whether you're an investor, a tech watcher, or someone who follows the AI data space, stick around because some of what came out of this call is genuinely surprising. Let's count it down from 10 to 1. Coming in at number 10, Domo's ecosystem partnerships are gaining serious traction. This quarter, Domo closed multiple deals alongside Snowflake, Google Cloud, and Databricks, not competing with them, but winning together. Customers are choosing Domo as the analytics and AI layer on top of their modern data platforms. That's a smart positioning play, and it's starting to show up in the win rate. Number 9, the industry recognition is stacking up. Dresner Advisory Services named Domo the #1 self-service BI vendor for the 7th consecutive year and the top cloud BI vendor for the 10th straight year. They were also recognized in Dresner's brand new Agentic AI-assisted analytics report. Nucleus Research named them a leader in their 2026 BI Analytics Technology Value Matrix. That's a lot of credibility from independent analysts. Number 8 is the one that raised eyebrows. Domo missed a key financial covenant. Specifically, they failed to meet the minimum ARR threshold required by their debt facility. Under GAAP rules, that forces the debt to be classified as current on the balance sheet. They've signed a forbearance agreement with their lender, buying time while the strategic transaction plays out. It's not a crisis, but it's a risk investors need to understand clearly. Number 7, retention is actually improving, and that's a big deal. Gross retention came in at 86.7%, up 240 basis points year over year, and net revenue retention hit 95.5%, up 150 basis points. In a quarter where subscription revenue dipped slightly, seeing these retention numbers move in the right direction tells you the existing customer base is getting stickier, not churning. Number 6 is a signal within that retention story. Customers who are on Domo's consumption-based pricing model are dramatically outperforming the broader base, 92% gross retention and 108% net retention. That means those customers are actually expanding their usage over time. As this cohort grows as a share of renewals, it becomes a compounding tailwind for the business. Number 5, the RPO tells a story of committed revenue. Total subscription remaining performance obligations came in at $412.9 million, with $222.2 million classified as current. That's a substantial backlog of future revenue locked in through multi-year contracts and consumption agreements. It doesn't solve near-term growth challenges, but it does give meaningful visibility into what's ahead. At number 4, the operating margin is genuinely impressive given the circumstances. Non-GAAP operating income was $4.4 million, a 5.6% operating margin, and this came in a quarter where Domo also hosted Domopalooza, their annual user conference. That event added real cost, and they still delivered profitability. Non-GAAP net loss per share was just -2 cents. That's operating discipline worth acknowledging. Number 3 is the forward-deployed engineering model, and it may be the most underappreciated part of this story. Domo is embedding engineers directly inside customer environments to build AI applications, agents, and workflows on top of governed data, often going from zero to production in just 24 to 48 hours. This isn't a consulting gimmick. It's driving deep platform adoption, real customer outcomes, and the kind of retention expansion that shows up in the numbers. Number 2, AI agents are not a future promise. They are live in production right now. This quarter, Domo showcased real deployments, a global media company running AI agents to monitor live event performance in 15-minute intervals, a logistics firm reducing terminal investigation times from 30 to 60 minutes down to near real-time, a healthcare marketing agency expecting to cut compliance review costs by roughly 80%. These aren't pilots. They're in production, delivering measurable ROI. And the number 1 takeaway from this earnings call: Domo is in advanced negotiations for a strategic transaction, and the board believes a deal is the best path forward for shareholders. After a comprehensive review of alternatives involving multiple partners and outside financial and legal advisors, leadership is signaling that an announcement is coming in the near term. No guidance was provided, no Q&A was held, which tells you just how far along this process really is. Whatever comes next for Domo, this call may very well be one of the last they hold as an independent public company.